Good morning, everybody. I'm Ed Parcaut. I'm usually here with Mike Kelly on our Real Estate Jerky Daily, but Mike Kelly is not here today. He won't be back until next Monday. So if you come to this just for him, we'll see you next Monday. If you come here for the news, I'm here to give it to you. All right. So Monday, there's not a lot of news today. The biggest thing that, is the whole tariffs and rates going on right now, the tug of war between policy and affordability. Basically, the potential for the tariff enforcement is looming right now. We'll know more by midnight tonight. There is a growing debate on how they could impact mortgage rates, affordability in the housing market. Higher costs due to tariffs could lead to inflationary pressures, which can turn influence Fed policy and interest rate decisions. Where are we right now? Dow's down about 220 points. It's been all over the place this morning. Mortgage bonds are let's see here, we're up 9 basis points for the day, so we're really not hurting so bad right now. The 10-year is down 4 basis points at 4.52. That could move in a second, and you just never know what's going on. But the biggest thing I want to talk about today is usually on Monday, we have the nationwide inventory. All right, so inventory is down 1,601 today for our end of last week. 634,979 is what the current number is. That's a very low number, but if you look, so current inventory, like I said, is 634,979. The same week last year, we were at 497. We were down from 503,000. And historically, all-time low, it was in 2022 of 240,000. And in 2015, if you use it for a normal number, we were 936,263. So we're about 300,000 lower, but you got to remember 133,000 of that is what I was told the other day is condos that are on the market and they're just not coming off. There is a big thing that people are worried about. They're making it like climate change has changed everything. All right. So a lot of people are paying a lot more for insurance than they are for their mortgages right now. And that could become a major problem down the road, and where house values can have a problem, because if you can't afford insurance for your house, you're not going to be able to buy your house unless you're paying cash, and people still want to protect their homes with insurance. So that's something that needs to be worked on. I think like in California, if we keep the water flowing, we're allowed to clean the brush, get rid of a lot of other stuff that we are not able to normally get rid of. I think we can get those rates down in California because we're going to do all that stuff we need to do. I don't know what we can do about hurricanes, though, and tornadoes, those things that are happening in other places. I don't know. If you know, please reach out and tell me what we can do. All right, so there was some, let's see, where are we at right now? Pending home sales, currently weekly pending sales are 282,172 nationwide. In 2024, at this time, we were 287,000. In 2023, we're 271,000. So we're kind of right there. We need more inventory. People are like, how do we need more inventory? Because there's actually people who want to buy a home, but because of where the rates are right now and everything, they can't afford it. And they need, and this is what I'm going to get into. The big challenges for first-time home buyers, they have dropped from 40% before 2008 to just 24% of them are buying homes right now. That's a huge difference. We need them to come back into the market. But if you look at where did it go? What they're saying is many first-time home buyers are needing their rate bought down. That's what they're doing to actually buy the home these days, is they're actually getting help on buying that interest rate down, doing like a 2-1 buy down or a 1-1 buy down, doing some type of buy down. Still to this day, they're still doing that. First-time home buyers and mortgage rate buy down. 27% of first-time home buyers request a mortgage rate buy down. Down payment remain a challenge. 23% of first-time home buyers are relying on family gifts. And then if you add in some of the deals where the buyer has to pay the agent, now you just took a lot of people out of the market. So that needs to get fixed. Eventually, I think this all will work out in the end, just like this whole tariff thing will be, I don't think we're going to see numbers through the roof this year with actual sales. I think we'll have an average year. I should say an average that we've had in the last 3 years. I know nobody wants to hear that. They still don't know when rates are going to drop down any lower. And even if they do, we're probably going to get down closer to 6, which is not what we need, because we need in the 5 for 3 months to get 9.5 million homes on the market to transfer sales, because sellers are going, hey, my rate's great. Yes, I'm not able to do a bunch of stuff. They just haven't had the pain yet to move that they need to. And buyers are figuring out. It's funny how we talk about one thing one way to one day and another thing a completely opposite the next day. And that's how news works, right? All right. So that's kind of, I know it's not much today. You're looking for a lot of fun and everything. Well, we don't have that right now. And let's see, what do we got going on the rest of this week? Is this jobs week? I think it is jobs week this week. Let's see here. We have tomorrow we'll have JOLTS, job openings. And so, you know, Wednesday on mortgage applications, ADP employment, Thursday initial jobless claims, and Friday BLS jobs report. And that was that report that had to be adjusted down by 80 some thousand jobs last year, because they overstated it than what it was, and that's not a good thing. Hopefully we'll have current numbers, which, we'll see what happens. And it's just a very unique year. I mean, with Trump taking over his first 100 days and everything they're doing to shutting certain things down and doing everything, nobody knows what to do. But if they're saving my taxpayer dollar and making sure it goes to the right place, I'm good with that. And that's all I'm going to say. I don't know what else is going on, but that's what I'm good with. And that's all I have for today. And again, thank you for being here. We really appreciate you watching us. And I hope you give you some great information today. Now, a lot we have today, but tomorrow and the rest of the week, we'll get over what's going on with the jobs and seeing how that's going to affect rates. If you need anything, reach out to us. If you have a comment or whatever, please direct message us. And again, make it a great day.